Hello, everyone, and welcome to today's special financial services webinar, Super Apps and Banking. I'm Dan Van Dyke. I'm Vice President of Content, and I'm Head of Financial Services at Insider Intelligence. I'm joining you live from our headquarters in New York City, and I'm going to be your host and moderator for this presentation. And I'm joined by my colleague, Principal Analyst Banking at Insider Intelligence, Tiffani Montez, who's coming to us from sunny San Diego. How are you doing, Tiffani?
I'm doing great. I'm excited to be here, Dan. Thank you.
Excited to have you. So before we kick things off, I'm just going to go through a few housekeeping notes. First off, if your colleagues haven't registered yet, that's no problem. Just share the same link that you used to register and they can join us too. And of course, rest assured that you don't need to take notes. You're going to receive a link to view the slides and a full recording of today's presentation. We also want you to participate, so please do use that chat window that you see on the right-hand side of your screen at any time to submit questions. We're going to leave plenty of time at the end during the Q&A to cover as many questions as we can, so please do keep them coming. Last time I counted, we had a lot, so we're really excited with the participation that we're getting so far. We're also going to address many of the questions that came in ahead of time during the presentation and the Q&A. So let's get started. So first off, 2022, it's no surprise that it's really turned up the heat and dialed up the competition. We've built our team at Insider Intelligence and our resources to focus on what's happening today and how it will impact you tomorrow. We frame our research in three different ways. First, what are the fast developing trends that you need to pay attention to? Second, what are the big trends and changes that you should be learning about to shape your plans and strategies? And third, how do you contextualize both those fast developing and big trends within the ecosystem, industry, or your competitive set? There are a number of aggregators in the market and more noise than ever. Our research methodology is rigorous, it is consistent, data-driven, and unbiased, and it's really one of the primary things that sets us apart in the market. We leverage over 3,000 sources to support our research, analysis, and our forecasting, and that includes sources like Kantar, IDC, Forrester, CB Insights, and so many more. We curate research and analyze the data. We evaluate the most relevant, accurate, and salient information for our subscribers, and we employ our own research methodology, including exclusive interviews with digital leaders and surveys that we run ourselves. We are also unbiased, so we do not offer a pay-to-play model unlike others in the market. There's no agenda to our research based on monetary gain or influence. We deliver all the content that we produce in the form of trends reports, market forecasts, and charts, which are ready to use in your own work product, benchmarks to help understand where you stand against your competition, and finally, our daily email briefings, which let you know the most important news and trends within your industry, such as banking, payments, or financial services generally. So let's get into it. Today, we're going to cover the super apps competitive landscape. We're going to look at how Eastern and Western super apps differ. And finally, we're going to look ahead to see what's next for super apps and what banks should do about it. We're going to start with what sets different super apps apart. So Tiffani, I think that's your cue to take it away.
I am excited to be here to share one of the latest reports published by the banking vertical on super apps. But before we get started, let's level set the discussion today and set some context to it by defining what super apps are. So Insider Intelligence defines super apps as a digital ecosystem of products, services, and information that is housed under a single application with a unified user experience. The super apps model is widespread in Asia, especially in China, and first took off in about mid-2010, thanks to two factors. The first factor is the unbanked population jumping into mobile. So early payments connectivity in that area meant that mobile, for many, was customers' first channel for digital payments. And that drove mass adoption of payment providers, services such as Alipay, and messaging app platforms such as WeChat, which also facilitates payments. The second factor in that area is strict market regulations. So the Google Play Store isn't available in China, and Apple is limited in what it can include in the App Store. So to fill the gaps in that market, apps like WeChat and Alipay allowed third-party developers to come in and integrate mini programs for other services and really transforming them into super apps with things like banking, payments, insurance, and wealth management products and services. So what does it take to build a super app? So to build a super app, you have to have a core app which is scalable. You have to have a product suite to be able to build out that app with services that complement that core app's offering. You also have to have partnership providers that are outside of your core competency to be able to integrate into that application. So when we start to think about things like super apps, there's a couple of things that are important. So first, a super app is supported by a combination of an owner's proprietary technology and also API integrations with third parties. Second, super apps are always underpinned by some kind of payment system to be able to seamlessly enable transacting within an app and to actually drive up app spending in that app. Third, a typical user app's core offering includes things like payments, messaging, e-commerce, and even things like rideshare in certain markets. And if all these things are done right, one super app will win all customers' attention and to really be able to orchestrate the experience in ways that aren't currently available in a financial institution market, specifically in the West today.
So that sort of tees up a couple of pre-submitted client questions that we got. The first one came to us from a card network, and this person was asking, how will open banking impact super apps? So what are the new use cases that might emerge, which sort of ties to your point around partnerships being critical for success with super apps? And the second related question was, how do you think open banking will change the FI landscape in the years to come, as it becomes increasingly easier to create those partnerships and offer more personalized solutions? So what does open banking really mean in the context of super apps?
Absolutely. So I love these questions because there's some very broad thinking and even visionary thinking in these questions. So I love them, first of all. So I'm going to attempt to answer both questions at the same time if I can. So in our Bank in 2025 report that we also published a little earlier in the year, we talk really about 4 emerging technologies that we believe will come together to shape what the bank will look like in 2025. And so if we think about banking as a service, it really is the foundation of all of this. And if you start thinking about open banking, it is really creates access to a sea of information that a financial institution can use. When you think about things like embedded payments or embedded finance, it really is an extender. It allows you to take your products, services, and even information and extend it into a new ecosystem. And then last, if you think about super apps, it becomes an orchestrator of digital experiences and all those different technologies coming together to be able to deliver on a unified customer experience. So really, when you think about all of that in combination, it really creates an opportunity for financial institutions to rebundle their products, their services, and their information. And in some instances, as we talked about earlier, super apps will really manifest as embedded finance or embedded payments if a financial institution chooses to play in that area. But also, if you think about it creating a single application that orchestrates a whole user experience around different tasks, then it really opens up the opportunity to really do 2 things. So I think one is just orchestrate the experience, and then secondly, to bundle and rebundle, and then even create new business models depending on what that unified experience looks like. So what is helping set the stage for what super apps will look like in the future, specifically in the West? So when you start thinking about super apps, one of the things that we can say is that app overload will really set the stage for Western super apps rise. So this year, users will access an average of 20.4 apps each month, a figure that we expect to drop to 19.7 in 2026. So we know that app fatigue is setting in, and that's really priming customers for multi-purpose apps. And users really are being able to start making decisions about how they want to consolidate their app usage themselves.
I want to quickly interject because we have another sort of related question that was pre-submitted. And you talked about app fatigue in that we're migrating to fewer apps that do more things. But this question is framed around the contrary. And somebody from a bank asked, are customers potentially better off without a super app? So arguably, will there be more innovation occurring when each company is focusing on doing what it does best?
So I think when you start to think about those questions, so absolutely, innovation is a key part of all of this. But I would say that the bigger part of all of this is, what do consumers actually want? And so according to a study by Deloitte, a third of consumers say that they feel overwhelmed by the number of devices and subscriptions that they have to keep track of. And when you start thinking about that overall need for consolidation of apps and consolidation of how and where consumers spend time within those apps, providers are also starting to notice and are positioning themselves to be able to meet that kind of demand. So over a third of executives say they believe it's highly likely that the bulk of financial transactions will take place through a single super app within the next decade. And that's according to the Economist Intelligence Unit.
That's fascinating. We have a couple of questions that I'm going to sprinkle in further down the line that sort of touch on if it's going to be winner take all. But for now, I'd love to hear you keep going.
Yeah, absolutely. So what does app overload really mean about a consumer's need? So I started off answering the other question about, like, what does a consumer need? And what it really is telling us is that consumers crave convenience. So there was a study that was done by Payments where they asked specifically how many customers would be interested in integrating at least 2 areas of their digital lives into a single app. And that was 67% of people. And when you start to break that down into an actual number, that is about 173 million people in the United States. And so really, to put that number in perspective, the super app's interest in the United States is larger than the entire population of Germany and the UK combined. Wow. So that's a really large opportunity. And that is why we think that the US will be the key battleground next for Western super apps. So why do we think this? Super apps spares users, again, the trouble of having to navigate between multiple apps, offering convenience, and in some cases, really reducing the amount of stress. And with the customer data housed in a single application, it really opens the door to create more personalized experiences that are available today. So who are some of the key players making a move to carve out a space in super apps market today? So although super apps is still nascent in the West, the field is already surprisingly crowded. And so super apps is really a broad church when it comes to competition, and all the key consumer-facing industries have a horse in the race at this point. So notably, there are almost no incumbent banks in the running today, with the exception of Bank of America, which is in our minds the most notable example after recently combining their consumer apps under a single umbrella. So what are the advantages that each of these players have in the super apps race today? So if we start thinking about big tech is really the most active player in the super apps race, and probably most undoubtedly the biggest. Some of the key players in the big tech space today are players like Meta, Google, Snapchat, and TikTok. And what is their secret sauce? They have superlative UX design, especially on mobile. They also have huge quantities of consumer data and unparalleled analytics. And they have enormous R&D budgets. And then finally, they've got brand affinity and recognition. When we start thinking about the payments giants are also quickly carving out a niche in the super apps race. In particular, firms like Klarna, PayPal, Affirm, and Block, formerly known as Square, are all making strides. And what is their competitive advantage? They've got an omnipresence online and also in mobile. They have experience with embedding services in checkout flows. They've got dense consumer touch points, and they've got rich insights into not only a consumer's financial behavior, but also their spending behavior. When we start thinking about neobanks, surprisingly few neobanks have made plays thus far in the super apps race. And that probably has mostly to do with their heavy reliance, or at least in the past, on investor funding and even lingering unprofitability issues. But nevertheless, there are some banks that are breaking the mold. So when we start thinking about the banks that are breaking the mold here, we're thinking about Revolut, Nubank, and N26. And so what is their secret sauce? It's the product-led design. It's cloud-native cores that allow them to do fast iteration on product development, and also customer centricity.
So I have a feeling I'm going to tee you up because I can read what you have on this this last row here. But we did have a question from a client in attendance. It was a retailer who's asking, what are the role that traditional retailers are going to play in the banking super apps ecosystem?
Yeah, that's a great question. So although retailers may not seem like an obvious competitor on the tech front, some players are making a name for themselves in the super apps landscape. And so when you start thinking about firms that are making a splash in the super apps race, you've got firms like Amazon and Walmart. And why are they jumping into this space? If you think about it, it's really 4 different areas. So the first one is they've got already firmly embedded into a consumer's financial life. There's also deep behavioral insights that they have because they do so much business with these brands. And there's also the recognition of the brand. And then finally, the smooth transition into e-commerce or even n-commerce prior to and especially the pandemic at this point kind of gave them a leg up in the race. So given each of these competitors all have a different competitive advantage, why do we think that banks are primed to enter the super apps race? So we know when we start thinking about a study that we do every year here at Insider Intelligence, which is our banking digital trust benchmark, we know that consumers place higher trust on financial institutions versus non-financial companies, as you can see by the chart on this screen. We also know that many financial institutions already have regulatory approval for financial products and services. So think about lending, underwriting, and investments. And we start to think about some of the newer products like buy now, pay later. 40.2% of consumers, current buy now, pay later users would be more interested in using an actual bank-backed buy now, pay later product, according to payments.
So something that buy now, pay later providers and big tech have in common is probably, a fear with all the circling regulatory uncertainty. And that relates to a question that we actually got from a client pre-submitted, which is how do regulator/legislator concerns over big tech concentration and steering of consumers, as well as antitrust regulations, limit the ability for them to develop a true super app in the United States? What's your perspective on that, Tiffani?
Gosh, so as we know, there's lots of looming regulation, and I think that will be the biggest, if not the single obstacle to super app unprecedented monopoly. And we really start to think about big tech, for example. There is unease from a regulatory standpoint about their unprecedented monopoly on users' data. And that bodes, poorly for what would be super apps as they aim to start monopolizing more consumers' time and attention. So that definitely is a threat on the actual big tech side. We also start thinking about upcoming regulation. In the United States, we know that the Consumer Financial Protection Bureau is probing big tech companies and their use of consumer data. And meanwhile, the European Commission launched antitrust cases into Apple, Amazon, Facebook, and Google. And it's expected to crack down on the industry even harder once the Digital Markets Act comes into play. So definitely that will be the biggest obstacle for any institution really that wants to enter the super apps race. But again, I'll say that banks are primed to enter this well because they're already operating under the context of a heavy regulation in their everyday interactions with consumers.
That's an interesting point. So I guess because they're so heavily regulated, which you would see as a disadvantage, that in and of itself has an advantage.
Yep, absolutely. All right.
So why don't we transition on to the second part of the agenda and take a look at how the West's banking super apps are going to develop a little bit differently from those of companies that pioneered the model in China, or maybe it's very differently. Why don't you tell us, Tiffani?
That sounds great. So we know that Western super apps are less mature than their Chinese counterparts. So when we start thinking about Chinese super apps, they're comprehensive. They encompass all aspects of a user's life as much as possible. And they do that by incorporating developers' mini apps, as I mentioned earlier. We also know that they're more advanced. They keep users more intensively engaged. and they've captured more mind share and data.
So while we're talking about different geographies, I guess this is the best place to slot this question in.
Sure.
So question came from a major bank contact there, and they were asking, how do you see financial institutions in Canada evolving to adopt super apps? I know you talked about the fact that the US market, because of its sheer size and population, is going to be the key one. But where does North America broadly and Canada in particular factor into this?
So we expect the Canadian super apps to follow suit and to create apps on what we believe is a hook offering. And so when we start thinking about a hook offering, it's really about adding related services to complement and or to supplement a app's core function. So to answer the question about how much really is too many, it's really more about understanding like what tasks the consumer is specifically trying to do, and how do you build features in that help move them along in their journey, whatever that core app's journey is. And so it really starts with being able to create that delicate balance of moving them from one place to another, but not bogging them down and creating more friction in that journey. Okay, so let's talk a little bit more about how we believe that Western apps will use this hook offering in the future. So Western apps, we believe, will focus on life stages. And so when we think about life stages, we believe that there will really be two different approaches that financial institutions will choose to move forward with. So first, it is an industry-focused super app. So really a one-stop shop for all of a user's needs in a given industry. So think about firms like Revolut and the financial services industry. So really deepening a relationship with the consumer by adding more products and financial products and services. The second one is really around vertical specific. So how do you help a consumer manage a specific life stage or a journey? And so if I think about a great example of a life stage and what is could be a lifelong journey is homeownership. And so when you start thinking about home ownership and all the different activities that go along with that, it really is about, how do you help a consumer find a home? How do you help them purchase a home? How do you help them move into a home? And then most importantly, after they move into that home, how do you help them manage that home as an asset?
So Danielle on the back end just pasted in a client question, which relates to a sort of unexpected life stage, which is if you are a victim of a data breach. And the question is, how important will cybersecurity be in protecting against potentially catastrophic data breaches if a super app has access to incredible levels of personal information? Do you have any thoughts about how data breaches and the protection of all this user data factors into this whole super apps conversation?
Yeah, I would answer the question actually a little more broadly, because I think this is something that we see with any digital capabilities that consumers use, whether it's just mobile banking or whether it's applying for a new product. And it really is about giving consumers assurance, number one, that you're going to do the right thing, that you're going to protect their data, knowing that they trust you to do so. And then I think the other part is making sure that you have all the checks and balances in place to be able to do that. But most importantly, that you do provide a guarantee to your consumers and you give them an opportunity to understand if they've been exposed and where they might even have exposure outside of your relationship, that it could impact the way that you do business. And are providers out there that allow a consumer to be able to check to see if their identity was part of a data breach and gives them actionable steps that they can take in order to protect that identity. So to really see how exposed they are, whether it is their information being stored on the dark web or their information being stored or part of a data breach. Yeah,
I remember as a Capital One customer getting a notification that my social security number had been breached on the dark web. And on one hand, that's a scary notification to get. On the other, it was clear what the next steps were. They laid that out for me. And I also felt reassured that they were at least monitoring so that I could take appropriate action as this occurred. So we have two more pre-submitted client questions that I want to interject with here. The first comes from James at a major bank who asks, how many super apps could the US market hypothetically sustain? So are we going to see a lot of super apps? Or are there going to be one super app who's going to rule them all? And the second sort of related question comes to us from Marlene at a major bank. And she's asking a sort of related question, which is, how can you avoid overwhelming users? So how many features is too many? So to tie those two questions together, how many super apps is too many? How many are we going to end up with? And when do you get to the point where you're just loading a super app with too many features? So how many features is too many?
Okay, yeah, I will expand a little bit on the answer I gave earlier, and I can tell this is really important to the audience because it sounds like we got 3 questions on this topic alone. So initially, we expect there to be many super apps, as you have really with any type of new technology, and they will either be industry focused or vertical specific. But as we know, when the market matures, there will always be consolidation. When we start thinking about each of the platforms, they play different roles. So as it relates to feature set specifically, if they are designed in a way to help a consumer meet a financial goal or to help them be able to manage a lifestyle or a life stage, when you start thinking about that, the features themselves really become secondary. It's really about creating a user experience that really leads the customer through a journey in a clear path and to help them accomplish that task for that life stage or that complex activity or whatever it ends up meaning, and being able to select features that will complement that experience. And as I mentioned earlier, it's really important to really not bog them down in too much detail, because the more you bog them down, you create friction, you've got more abandonment or incomplete tasks, etc. The other thing that I'd say, based on some research that we've done for our US or UK or Canadian mobile banking emerging features benchmark, we had a data collection partner that we worked with at the end of last year. And one of the things that we looked at is, if you have more features, does that mean a higher satisfaction score from a consumer perspective? And one of the interesting things that came out of that is that more features didn't mean more satisfaction. And so when you start thinking about features, it really is about the value that you deliver to that consumer and the value that you create, whether that value is convenience or whatever it ends up being. In this case, it is convenience, right? Consumers want to be able to consolidate things into one place and to be able to move through those activities seamlessly.
Yeah, that's such a profound point that I think gets lost when you consider all the complexity of trying to roll out these features, the silos that exist, the operational headwinds that you're up against, that at the end of the day, the customer has an end game in mind, and limiting the number of steps to that end game is the key metric of success, as opposed to the sheer number of features that you're throwing out that are available to them.
Great. All right, so let's get into an example. And I'm going to preface this by saying this is a hypothetical example, but I did want to come up with something that I think brings what we've been talking about today to life. And so what you see on the slide here is an example of a super app that could be built around the home ownership journey. So when you think about home ownership, it's complex, it's stressful in a lot of ways, and there's lots of moving parts that do have some time sensitivity to them. So when you start thinking about that, what if a lender moved all these components into one app to offer consumers the convenience of managing all the things like finding a real estate agent, finding their dream home, getting financing, being able to close on their new home, getting that home move-in ready, moving into the home, then tracking the equity of their home, and then doing remodeling. And I could go on and on and on. I'm sure that I missed lots of other steps in there. I'm just trying to do it off of memory here. But when you start thinking about that, it becomes increasingly overwhelming. And a lot of these activities that occur today are being managed in separate places. Maybe some of them are being managed in apps. Maybe some of them are not being managed anywhere, maybe on a piece of paper. I'm not sure. But when you start thinking about it from a consumer's perspective, it's overwhelming. And so when you start thinking about a lender, really what that means is if a lender decided to build an app that encompassed all these different activities, the benefit for them really would be that they could step in at any moment where a consumer needed help with their home. And so, for example, let's say that they've got a home for a while, there's clearly equity in that home. And when the customer has equity and they decide that they want to use it, they can step in and not only help them, tap into the equity of the home, but even be able to tap into the equity of their home responsibly, helping them understand the trade-offs of if you use the equity for this versus that, which is better for you to be able to do. And what that ends up meaning from a consumer's perspective is that it saves time, that it's more convenient for them, and overall that it would reduce the risks of coordinating all of those activities across all of those different life stages, which are probably happening in a bunch of different places today.
So you mentioned that that was a hypothetical example, and with interest rates rising, entering the home ownership journey is becoming all too hypothetical. So that sort of transitions into the next step on today's agenda to sort of talk to how market turmoil is going to impact the growth trajectories of super apps, both positively, negatively, short-term and long-term, and what banks need to do to get ahead of those changes today. I'd love to sort of transition the conversation to that market turmoil piece.
Yeah, that sounds great. So when we start thinking about short term, under, we'll call it the era of uncertainty, which we speak about a lot here at Insider Intelligence, it really is about seeking new sources of growth in the short term. And we know that top talent is going to return to financial institutions, which also creates an opportunity. But at the same time, there will be some easing off of tech spending. When we start thinking about long-term, we expect financial institutions specifically to prioritize on building super apps centered around financial health, because we do know, if we enter a recession, there will be lots of consumers that will be financially distressed. And as a result, financial institutions will have to step in to be able to fill the gap, much as they did during the pandemic. The second part of that is that the cutback on spending that we talked about earlier short-term, that will also increase the maturity curve long-term for the super apps race. And then last, we expect that big tech will make plays through partnerships and pure plays. So they will continue moving along and continuing to build off the foundation of super apps that they've already created.
So you started to touch on this, but we got a question from Thomas, who is at an issuer, and he asks, and I'm paraphrasing here, with a recession looming, how could super apps offer advantages to consumers who are up against really challenging economic headwinds?
Great. So, we know there's inflation. We know there's rising energy costs. We've got supply chain slowdowns. And all of that has really soured the economic outlook for U.S. consumers and even businesses. But prioritizing consumer needs and really maintaining a long-term perspective on technology investments will enable incumbent banks to weather the storm. And so although banks need to be focused on seeking new areas of opportunity, they will also have to be able to adjust their priorities to cut costs. And naturally, as I mentioned earlier, economic uncertainty will lengthen the curve of the super apps maturity.
Yeah, that makes sense.
So what approach can a financial institution take to launch a super app? So let's get into the details now. So when we start thinking about super apps, we really believe that there'll be two different models that will emerge for banks. And that really one will be around integrating. So how do you integrate into an existing super app? So embed your branded or white labeled products or services into a third-party super app. The second one is to embrace it. So launch your own proprietary super app focused again on things like life stage or financial goal. And so the homeownership example that I gave earlier is one area or one example of what that might look like. But I would say that these two things aren't mutually exclusive. I think that we will find that there will be some financial institution that will dabble a little or dabble a little more in one and a little less in another. But I think that there will be financial institutions that will choose to follow more of a hybrid approach and dip their toes into both different models.
Just to be clear on that embrace point, you're not saying that a bank is going to build a direct competitor to like a Revolut, so doing everything everywhere all at once. What you're defining super apps is more narrowly around a specific life stage or a financial goal. Is that right?
Yeah, I mean, I think over time, if you have enough super apps, for example, that are based on a financial goal, that you could bring them under one umbrella. But I think initially they'll pick their areas of focus, or as we like to say, use cases, where they choose to use a super app to solve a more complex problem or to help consumers navigate through a life stage. All right. So when we start thinking about the two different approaches, the approach that banks will take to enter the super apps race will really depend on their size. So when we start thinking about the integrate model, some of the risks of using this type of approach is, of course, disintermediation, which we all know. Commoditization is another one. When we start thinking about the opportunities that it creates on the other side of that is lower cost of acquisition, wider distribution networks. And those opportunities and risks, of course, look different for smaller or mid-sized financial institutions. So the risk for them is really, the race to the bottom of the price. And the opportunities for them is lower marketing costs or lower cost to acquisition, because as the cost of technology goes down, all of that level sets and brings the costs to be able to acquire or to transact in a super app down.
Another different dynamic, and this relates to a client question that we got from a credit union, is around partnerships. So if you're a smaller bank, how are you going to navigate all the partnerships that come with integrating into a third-party super app? Do you have a perspective on that?
Yeah, so, I would say that super apps really accelerate the need for partnerships, and that banks will have to work with networks and even developers at fintechs and consumer brands, which really raises the question of whom to partner with and what legal agreements, things like risk controls, and even technical means are evolved. And when you start thinking about that, ultimately what it comes down to is who's going to own the customer in that type of experience. And so as APIs and developer environments really become instrumental for a bank to be able to participate in this kind of fintech ecosystem. And so for third-party developers to access their array of things like APIs, banks really need to create a single point of integration into a platform. And so think about an API marketplace with developer-friendly experiences, sandboxes, simulation suites, tools, analytics, all of those things. And companies that don't have a direct agreement with the bank can still connect through their bank's developer center if it offers one. So the development center really is where a bank can advertise the different APIs that they have available and they support, and let developers register to use those APIs and provide a sandbox for them to test in. So that was the long answer. The short answer is that there is lots of opportunity and lots of different ways that you can go about implementing, either playing in an ecosystem of a super app that's already built or launching your own super app.
Yeah, as well as risks. I mean, thinking back to Google Plex and the sort of head fake that ultimately came to be, just the sort of Faustian bargain that you get when you trade deeper, but a more narrow pool of customer relationships for a broader, shallower pool of customer relationships that you get through a super apps. It is a tough trade, but one in which banks' hands might be forced if this is where we're going. It's either get on the boat or don't.
Yeah, and I guess get on the boat is more opportunity, and not get on the boat is continuing to manage your business the same way that you do, knowing full well that consumers are over here doing lots of other things that have financial impact.
Yep.
All right, so when we start to think about embracing a super app, building a super app really demands strong resolve, and in a lot of cases, a really deep wallet. And so for large mega banks, really the risk for them is stiff competition from US expert rivals. So start thinking about the big techs and the payment giants. When we start thinking about opportunities, it's really about market dominance. So how do you deepen a customer's engagement? And really the deeper engagement that you get in areas where you get lots of information, you also get a bigger source of proprietary data. When you start thinking about small and mid-sized financial institutions, really the risk for them is the lack of UI differentiation. And we all know that they probably have more limited R&D budgets than the larger financial institutions. And so when we start thinking about opportunities for them, it's really a little more limited. And we think that most of them will really adopt the wait and see approach. So with that, that rounds out the discussion today. As I mentioned earlier, the webinar today is based on a report that we published earlier in the year on super apps that is available for our clients to download, that has much more details that we were able to get through in this conversation today. And with that, I'd like to thank you for being generous with your time and your attention. And I'm going to hand it back over to you, Dan.
Yeah, well, I'm going to pass the baton right back to you in just a moment, but thank you so much, Tiffany. That was really great. We have so many questions that we got for the Q&A here, which is fantastic. Some of them live, and we're going to get right into them. First up, if we don't get to your question right away, don't worry. We're going to be sending out written answers to some of the top questions we received after the event. We just don't have the time. Some of them are more narrow, but we want to respond to all of those. So the first one that we got comes to us from Melanie at a credit union, and she asks, can you share your thoughts on how to create a super app that is user-friendly for diverse age groups? So something that appeals to Gen Z and baby boomers and everything in between. What are some of your thoughts on that?
Sure. So to build a super app or really any digital capability, it's important to look at the consumer demand data to see what features consumers want the most, and building solutions that meet sort of the larger collective need of your consumers. And so one thing that I'll share is that Insider Intelligence has benchmarks on mobile banking, account opening, and as I mentioned earlier, digital banking, digital trust, that highlights all the different emerging needs from a consumer's perspective. And that information really can be used by financial institutions to help them determine what's sort of the largest base of customers that you can attract with digital features. I would also say that in each one of those benchmarks, that it is important to be able to analyze different segments, especially when it relates to be able to market the types of capabilities that you have for consumers. So analyzing those different segments as well. And when you do all of that, it really creates an opportunity for financial institutions to zero in on the actual features that consumers demand the most across generation or even across specific demographics, and then use that information to be able to see how they stack up against consumers' needs.
It's interesting to look at some of the high-level trends, not just feature by feature, but by category when it comes to differences in demand across generations. Like you look at security features, pretty consistent demand across generations, whereas digital money management tools appeal much more so to people who are just getting started in their careers, who are just beginning to build wealth, who are entering a pretty tough workforce, laden with student loan debt. And demand is very intense for a lot of digital money management features among those generations. So great point. Next question comes to us from the audience. What are the top 3 non-financial use cases in banking super apps? Any thoughts on those?
Gosh, if I start thinking about where the opportunity might be, I think one that comes to mind would be planning for, preparing, and filing taxes, I think would be one. We also think about small businesses. I would think about being able, like firms like Quicken that allow them to be able to, start a new business, to grow it and to manage it, and providing the capabilities. They may not advertise themselves as a super app, but definitely all the components are there. And I would say the same for Shopify. It's another opportunity where they provide all the tools for their clients to be able to grow and manage and build their businesses. So again, some of these firms today aren't necessarily advertising themselves as like, I am the super app, but they certainly have all the different components and showing where they could take this in the future if they added more features and capabilities, and perhaps even marketed the way that they interact with their clients a little differently.
So this time you teed me up. So the next question is, what is the main difference between an app and a super app? So you mentioned that QuickBooks doesn't market themselves as a super app because of the functionality they built out. They could be able to. So when does somebody really cross the line from saying this is an app to this is a super app?
Gosh, I think it really depends on, I think it depends on what they're trying to do. So, one of the things that we see in the market is that anybody that has mobile banking, well, not anybody, lots of instances where people have mobile banking that have called themselves a super app of finances. So I think that's like a super financial app. But it's really still owned the products and services that they own themselves, right? And part of that could be the play that we talked about earlier, where you embrace it and you just continue to bring in new features that support more complex financial activities. And I guess the best way to think about that is under the context of line of businesses within a financial institution. But when you start thinking about what is really a super app, it really is a rich ecosystem of lots of different players that come together to serve a customer's need in a single app with a unified customer experience and a seamless UI. And that, I think, is really the key differentiator is really more along the lines of, it's not just the ecosystem that you control in things like mobile banking and the products and services that you add. It is a more sophisticated ecosystem of third-party players that you bring together that all individually, we'll call it integrate or embed their own core offering and their own core competency for the greater good of a consumer.
So control what you can, except that you can't control the remainder, something I try to remind myself every day. That we've got about 10 more minutes that we can take for questions. We're just going to keep hitting them until they stop coming in. One of the questions that we've got is, how important will cryptocurrency related features be in banking super apps? Any thoughts on that one?
Gosh, I think I would go back to what I said earlier. All of this will really be based on consumer need if done right. And we mentioned earlier that one of the underpinnings of a super apps is payment capability. And so what I would say is, if there is a need, meaning a consumer need, to be able to integrate things like crypto into an ecosystem, like if there is a reason and there is a need, that will happen. But I think it also is going to be somewhat driven by market conditions. And we know market conditions right now, necessarily, it's not favorable. I would say to be able to integrate crypto in right now, but it could be in the future. And again, it really depends on consumer demand.
So one of the forecasts that we just launched this year that I was really excited about was our cryptocurrency payments forecast. And we got to size up, the total volume of cryptocurrency payments. It's currently sitting around $5 billion a year. So not nothing, but certainly not large. When I think about the value of cryptocurrencies and what they really represent to people, the use case as a speculative investment, an asset, an equity, really comes to the fore. So I feel like cryptocurrency custody is the first step, and then cryptocurrency, payments is maybe another step, but cryptocurrency trading seems to be where the majority of the interest lies. And yet that's such a fraught space for banks to enter into, with crypto winter being a clear warning sign for anybody who is sort of sitting on the sidelines. So definitely a space to watch, but one in which there's a steep risk cost to any move in that space. Let's keep moving on to the next question, which is, Tiffani, you gave an example of home ownership being an opportunity for a super app. Do you see any first movers building out a super app in the home ownership space, actually? So what do you feel about that?
Gosh, I would say that there is, I don't know that I see any examples of like end-to-end, meaning you find a realtor, you find a home, you move into that home and you manage the equity in that home, et cetera. I think that we see examples of sort of the front portion of that, meaning the finding and the buying the home. And you've got firms like, I think Blend, for example, that are starting to play in that space. And then I think we don't see any great examples of the latter portion of the example that I provided, being able to track the equity in your home, understanding the best ways to use that equity. And then if you use that equity, for example, to do a home improvement, how does that impact the future value of your home? We are seeing very little evidence that that is occurring in this space. And quite honestly, I think sort of given the market, that use case may move along a little bit slower than I would have, predicted earlier in the year. Yeah,
it would be fascinating if somebody who was involved in the mortgage space were to acquire somebody like Zillow. So to really begin with the awareness stage of the customer journey. But certainly a fascinating space to watch. Next question that we have is, how important of a competitive factor will consumer trust be when it comes to banks, to big techs, or to others winning the super apps race. So that's sort of tied back to some points that you were making earlier about trust as a competitive advantage. But could you sort of expound on the value of trust, in particular in such a sort of uncertain time?
Yeah, so I think we mentioned earlier that right now, when it relates to trust, that consumers trust financial institutions more than they trust some of the other players. And as I talked about earlier, we think that that is one of the advantages that banks have. We also know that trust is a fickle thing, right? And that at any point in time, trust can erode based on, lots of different things. There could be market factors that come into play that that also impact the way that consumers interact with their customers, and trust can erode in lots of different ways. That will be the single most important thing for any institution that chooses to go in this race, for them to monitor and to really understand is their perception and their consumers' perception of them and how they want to do business with them. I will say that the results that I gave earlier were from our last year's study on the banking digital trust, and we are next month publishing the study for this year. One of the things that we did differently this year is that we chose to add in neobanks into banking digital trust. And so I don't have any preliminary results to share with you just yet, but I would encourage, here's what I'll say, I would encourage our clients to go out and read that report, because there's definitely some shifting that is going on with consumer trust, and I'll just loosely say brands, that will be important for them to know as they start kicking off their super app strategies.
Oh, that's a great teaser. Personally, and I actually haven't seen this data, I'll be interested to see how trust for financial institutions relative to some of the others like PayPal or payment networks or big techs trended year over year. An interesting thing that we saw coming out of the pandemic is that some of the moves that banks did to support customers during that particularly dark and difficult time really paid off. So they began to turn the advantage in their favor when it comes to aggregate consumer trust. And it'll be interesting to see if that carries forward. So next point that we have is, or next question rather, Eastern super apps started from businesses that were embedded in people's daily lives. So chat, search, shopping. Does it make sense for an everyday retailer to have a super app and to have payments as part of it? So does it make sense for an everyday retailer to have a super app and to embed payments as part of that? What do you think?
So I think it depends on how well integrated you already are in a consumer's life. Where are your interactions occurring? Are they occurring in brick and mortar? Are they occurring digitally? I think is the first part. Number two, do you have the scale? Because to pull this off, you really do have to have scale. So those would be the two big questions that I'd ask. And then I'll go back to the third thing that we just talked about, which is, what is consumers' perception around trust with your brand? And so I think if you answer those three questions, it will naturally push you towards one direction or another. And that direction could be, it's not just a yes or no, that direction could be, do I choose to integrate or do I choose to embrace? And maybe I'll use scale as an example. If you don't have scale, then maybe it makes more sense for you to integrate and increase your scale so that you can get to a point where you actually embrace and build your own app.
Yeah, and I think, one of the prerequisites of scale is regular engagement. But that's a point that I would add is if you don't have that hook offering, so if consumers aren't coming back to your app multiple times in a given week, you're not going to be able to wrap around all these auxiliary services and build out a holistic super app. So we have time for, I think, just one more question. So I got to pick between these two. It's a hard choice, but do you see a potential bias for super apps leaning towards banks versus credit unions? Let's go with that. Tiffani, what are your thoughts?
I would think that it's probably going to lean more towards financial institutions, the larger incumbent banks. And here's why that I say that. I'm going to go back to the scale comment. When you start thinking about their interactions in a digital environment, there's a lot more activity. Even if you think about mobile banking adoption and utilization, it is higher at the larger financial institutions. And I think that there are still smaller financial institutions that struggle to get that, we'll call it transactional scale.
Mhm.
And so until you can start bringing the amount of volume that you have and you create stickiness in your own mobile assets, that is where you'll start to sort of tip things a little bit more into your favor. But I do think that it is about sort of solving, one thing first and increasing scale before you move on to creating more dedicated super apps.
Yeah, and I think that answer really related to the embrace model. But
Mhm.
from the integrate model, the silver lining is,
Absolutely.
the unit economics for a smaller financial institution who is below the cap for Durbin exemption is much better.
Yep.
So if you're trying to make a banking as a service play and integrate into a third-party model, you are much more attractive as a smaller provider. So unfortunately, that is all the time we have for today's presentation. Tiffani, thank you so much for sharing
Thank
your
you.
stellar insights with us. And a huge thank you to our production crew behind the scenes for making this webinar possible. We hope you have all found this presentation useful. You've uncovered a few nuggets that you can use to drive your business forward. As we wrap up, let me just take a moment to tell you what's happening at Insider Intelligence. So first, you can register for our upcoming live analyst and tech talk webinars at insiderintelligence.com/events. Once again, that's insiderintelligence.com/events. On the audio side, if you like to listen to us on your commute, don't forget to subscribe to Behind the Numbers, which is our daily podcast. Sometimes I'm on, sometimes Tiffany's on, sometimes David's on, Eleni, all of us on your podcast app of choice. And finally, if you're not already signed up to one of our free newsletters, you can do so at insiderintelligence.com. And remember to keep an eye out on your email inbox for the link to today's presentation. And of course, feel free to email us if you have any other questions. Thank you for joining. I hope you found it at least half as enjoyable as I did. I learned a lot, and enjoy the rest of your day.